So futures like gold and silver fell off a cliff on Friday, along with cryptocurrency. This is from the Wall Street Journal. U.S. stock futures fell Sunday along with Bitcoin after Friday's massive sell-off in precious metals capped the tumultuous first month of 2026. The DJI had a 75-point drop on futures. S&P 500's futures dropped about 30%, and the NASDAQ had a almost 60% drop in futures. So even though there was a little bit of an uptick there on Sunday for gold and silver, there was, some gains kind of came back, but the wipeout on Friday erased a combined $7.4 trillion in market value as gold fell 11% and silver slid 31%, a sharp reversal from their record-setting gains over the past year. Bitcoin continued its slide over the weekend, dipping below $80,000 for the first time since last April. It was recently trading below $77,000. The crypto plunged around 10% on Saturday and is down nearly 30% over the past 3 months. Given the buildup of positioning and leverage involved, Friday's gold and silver sell-off is bleeding into other markets. Kyle Rada, senior financial market analyst at Capital.com, said in a Sunday note, effectively a deleveraging is happening, forcing traders to sell other assets to cover losses on their losing precious metals positions. That's contributing to the sell-off in stocks and probably contributed to the Bitcoin's plunge over the weekend. This is definitely a liquidity tightening is what we're dealing with right now. Positioning was extremely crowded going into Friday. The markets were loaded with bullish bets. Equity futures were heavily long. Bitcoin had a big speculative premium and volatility was crushed. But when positioning gets this one-sided, you don't need bad news necessarily. You could even just have kind of not so great news happen and it'll trigger a forced selling. But I don't think that this was panic selling. It was more just like Kyle said, it was kind of an unwinding of leverage. But I do think that the rates and dollar pressure re-entered the chat for sure. Even a small move in like treasury yields ticking up and the dollar firming can be sort of a poison for risk assets because the higher yields kind of equal, money having an alternative again. And, the stronger the dollar, global liquidity tightens, which is what's happening, what you see happening. Risk premiums sort of reprice. But Bitcoin isn't digital gold in moments like this. It trades kind of like a leveraged tech stock when liquidity tightens. And that's kind of what happened here. So a little different than what happened in the futures markets, but futures markets amplify moves fast. Futures don't move like stocks. They're leveraged. They're margin-based. They have liquidation thresholds. And once key technical levels break, the algo selling kicks in. And it just becomes, margin calls hit, forced liquidation sort of cascades. And that's why it kind of feels like a cliff and less like a slide. But Bitcoin got hit by mechanical liquidations. Crypto is always more brutal because it's high leverage. It's 24/7 market. And once Bitcoin lost a few key levels, longs were forced closed and the selling pressure sort of fed on itself and spot selling followed derivatives. And more importantly, I would say that this wasn't really people changing their minds about Bitcoin or anything like that. Not in this moment. It was just leverage getting wiped, profit taking after a strong run. I mean, I think if you zoom out, you'll see that equities were up hard. Crypto had rallied massively. Volatility was underpriced. So I think it was just people locking it in before the weekend. It wasn't fear. It was just professional risk management, and definitely had a lot to do with a tightening of liquidity. But the real takeaway, and this is what I get from all of this, is that it was a liquidity event, not a narrative shift. So there wasn't any sort of recession signals or crypto bans or systemic failures or smart money abandoning ship or anything like that. It was more like overcrowded longs, tightening financial conditions, mechanical selling, and markets do this to reset leverage, not to announce the end of the world. And one thing I will leave you with, though, is if this drop scared people out, who do you think bought on the way down? That answer will usually tell you more than the headlines. But anyways, I just wanted to, give you guys some insight on what happened here. I do not think that this is any signal of anything long-term or anything. I think that if anything, it might even be in a way it's a good thing, because it's probably a good time to start reinvesting in your long-term tech bets. And I would almost guarantee that's what a lot of people just did. They're less concerned about safety at this point. So anyways, again, my name is Tom Kane. This is another episode of the Executives Playbook. Please like the channel, or like the video, comment under the video, and subscribe to the channel if you haven't already. Hit the little bell, and I'll be here every day talking about money. All right, thanks.